You know, 3 months ago, I looked at my brokerage account and told myself one thing. It's time to make my money work harder. I had around $200,000 in capital. Not a fortune, but definitely enough to do something meaningful. I didn't want to gamble it. I didn't want to YOLO it into meme stocks or short-term hype. I wanted a strategy that could grow my account steadily while still keeping me in the game for the big moves. So today, I'm going to walk you through exactly how I grew my brokerage account by over $40,000 in just 3 months. Not by day trading, not by luck, but by combining long-term investing in great companies with short-term option selling for income. And remember, this is not financial advice. I'm just sharing what I did and what worked for me. Your results might be different, but I hope this story gives you some ideas, or at least some perspective, on how to approach the market more strategically. Let's rewind a bit. When I started this approach, the market was buzzing with volatility, interest rate talks, AI stock momentum, tech sector pullbacks. And instead of trying to time every single swing, I asked myself, which companies would I still want to own 5 years from now? That's when I went back to the basics. The great compounders, Nvidia, Tesla, AMD, and Apple. These are companies that not only have strong earnings growth, but also dominate their industries with innovation. So, the core of my strategy is simple. I hold shares of these high-quality stocks for long-term growth. That's where the capital appreciation comes from. When NVDA breaks new highs, when Tesla bounces off key levels, or when AMD and Apple continue to deliver. But that's only half the story. The other half, and where the consistent cash flow comes from, is option trading. Now, I'm not talking about buying risky out-of-the-money calls or swinging for the fences. I'm talking about being the casino, not the gambler, by selling puts and covered calls. When you sell options, you're essentially taking advantage of time decay. You're getting paid up front, in the form of premiums, for taking on calculated risk. For example, if I own Apple shares, I can sell a covered call at a strike price slightly above where I'd be happy selling them. If the stock doesn't hit that strike, I keep the shares and the premium. If it does, I still make a profit because I sold at a higher price. On the flip side, if I want to buy a stock like Nvidia at a discount, I can sell a cash-secured put below the current price. If it doesn't hit, I just collect the premium. If it does, I get the shares cheaper than the market price. A win-win setup. In the last 3 months, this strategy has done exactly what I hoped for. Grow my portfolio steadily while generating income. Here's the breakdown. My overall account is up around $40,000 since I started this strategy. That's about a 20% gain on my $200,000 capital. From the option premiums alone, I've been collecting between $2,000 to $3,000 per month, consistently. And one of my favorite trades, the Apple option play I mentioned in my previous video, has now generated over $5,000 in profit. The best part? Even when the market moves sideways or slightly down, I still get paid from the option premiums. That's the beauty of it. It turns time into income. Now, don't get me wrong. This strategy isn't set it and forget it. It still requires discipline. You've got to manage risk, understand the stocks you're trading, and be patient. The biggest mistake new traders make is over-leveraging or selling options on volatile stocks they don't understand. For me, the key is balance. I allocate most of my portfolio to owning great companies that I believe in for the long run. Then, I use 10 to 20% of my capital for option strategies to generate monthly income and lower my overall cost basis. It's not flashy, it's not instant, but it works. The result? A portfolio that's both growing and paying me. I like to think of it this way. The stock gains build my wealth, and the option premiums fund my lifestyle. One provides growth, the other provides cash flow. Together, they compound faster than either would alone. And that's the takeaway I want to leave you with. If you're an investor who wants to grow your portfolio steadily, not through luck, not through chasing hype, but through a system that rewards patience and smart positioning, this approach might just resonate with you. Again, I'm not giving financial advice. I'm just sharing what's been working for me over these last few months. So, if you found this helpful, make sure to hit that like button, subscribe, and turn on notifications. I'll be posting updates on my trades, sharing breakdowns of my open positions, and walking through how I manage risk when selling options. The markets are always changing, but with the right strategy and the right mindset, your money can grow even in volatile times. Thanks for watching, and I'll see you in the next video.